certainly anybody thinking that negotiations is going to be the pathway forward has got to come to grips with what reality is here. Iran is not going to make a deal with us that would satisfy us. The reality is we've got to reassess where we are. Escalating against Iran, which is what we've been doing day by day based on their attacks, is not working. It's obvious what we must do is return to major combat operations, Stuart.
President Trump fuming after Iran launched a ballistic missile attack targeting U.S. forces in Jordan, telling Fox News' Trey Yingst the strike came as a surprise and, in strong words, America will respond. Markets are now bracing for what comes next. Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-host Taylor Riggs, Dave McDowell, Jackie DeAngelis, and with us for the hour, Great Hill Capital Chairman Thomas Hayes. Good to see you, sir.
Great to be here.
The Middle East conflict escalating as the U.S. and Saudi Arabia are now striking Iran-backed groups in Iraq. Oil surging as Strait of Hormuz tanker traffic remains largely at a standstill, raising fresh concerns about energy prices, inflation, and the markets. I like, Tom, the words that General Keane used, come to grips. Is the market coming to grips with what appears to be an emerging reality that we're not going to be doing deals with Iran? What do you think?
I think there's something to be said about that. I also think that the price of oil has been relatively contained relative to the amount of ships that have gotten through in the last few months because the Chinese have at least three times the strategic reserves that the United States have, and they have not been buyers into this strength. So that marginal buyer has not been in the market. They've been living on their reserves, and they've got years and years of reserves. So when oil prices were negative during COVID, China was loading up. When oil prices went down in 2016, China was loading up. During the great financial crisis, when you couldn't give a barrel of oil away, China was loading up. So now they're in a good position. It's actually helped the global economy, which is in China's interest, by them not being in the market during this period. So I think we've got some runway with those strategic reserves if China's not in the market buying, but that puts us in a slightly weaker position despite the fact that we have incredible reserves and incredible production. At some point, we've got to get more and more ships through that, and we have to have the alternatives to get around the Strait of Hormuz for this market to calm down.
Well, Dagan, you know I'm going to bring you in on that comment because you've been talking about China's demand or lack thereof for oil. Tom threw few key words in that statement. He threw a big if in there, and he threw a big China's interest in there as well. I'll add this. Reuters reporting that China is sending 400 shoulder-launched air missile defense systems to Iran right now. So they may not have played a huge role directly, but they are playing a massive role indirectly. How do you read that?
That, based on what Tom was saying, that now leaves China with a weapon. That if China starts buying more oil, and you know the imports had fallen dramatically by a combination of what both France and Germany consume. But if they reverse that, even in a small way, given all of the bottlenecks that exist in the world right now, they have the ability to use that as a weapon against us. Yes. And I will note just a bit of news that in the last hour or so, the U.S. Treasury did sanction 2 companies used by the IRGC to charge fees to ships crossing the Strait of Hormuz, acting, kind of charading as insurance and maritime services. So that kind of speaks to what Secretary Bessent has been doing, that I don't think you would see another Treasury Secretary do, but really boring in on where the hot spots are and the choke points are in the Iran regime and their ability to export crude. But why would China do that? It would to put pressure on us as an economy with higher energy prices, but also if Iran can export less crude, they could still make the same amount of money if the prices are higher.
If the prices are higher.
Jackie, let me come to you on this. We were talking yesterday about this thing potentially getting bigger and hotter. And we Iraq has now been pulled into this in a way that they weren't before. Of course, the Red Sea, Bab el-Mandeb, is becoming a bigger question mark. Do you think this thing's going to get a lot bigger and a lot hotter before we get to the other side of it?
It's always existential when you come to me because the president used some expletives yesterday. Now, this is not the first time that he's used them. The first time he used them, I thought, wow, he means business. Now he kind of uses them and then nothing happens. And so I don't know how serious he is, but I really like the piece in the Wall Street Journal today trying to analyze all of this and break it down, that Iran is not just responding, but now playing offense with us, right, as a result of what we've just seen, in this attempt to force President Trump to make this bigger. He's been biding his time because he's watching all the pieces of the puzzle and saying, I don't need to move right now. I don't need to escalate this. We're controlling them to a degree. Oil's moving through the strait. The alternative routes are being worked on. At the apex of a conflict, oil is up 5 and change today, but we're only talking about $85 on WTI, which is remarkable if you think about any Middle Eastern conflict in the past. And so he's in no rush, which is why he keeps saying, we'll talk, we'll talk, we'll talk, even if he knows it's not going to lead anywhere. But when they keep doing things like this, then, you know, I hate to bring up the word, and Charlie's not here today, but, you know, taco, right? Trump always chickens out. I'm not saying he is or he isn't. I personally think he's got a strategy here, but that, of course, is what the other side is going to say. So is this the time that it turns into an escalation? At some point, it's going to. I don't know what he's waiting for. I have to assume he's got information that we don't have. Yesterday, I sort of laid out the thesis that potentially he may know on the ground things are worse in Iran than we know, because not a lot of information comes out of that country to us, and that potentially they could be on the verge of a collapse. Everybody would love to see them collapse before we have to send troops in to do anything. And he's still got an arsenal before he does that, too, which is wiping out some of the infrastructure that still hasn't been touched. And he brought that up and said that it could be done quickly. So we'll see. I mean, we never have a crystal ball into what the president is going to do. And that's how he likes to run his presidency. And that all remains a mystery.
Taylor talked a lot, and I think persuasively, about the market looking through what's happening in Iran, just not reacting that strongly.
Right.
The strong assumption that one way or another we get through this, and at least economically, the big factors kind of settle back close to where they were before all of this started. Maybe that's still the case, okay? But the more countries you bring in significant ways in this whole conflict, the less it seems, the harder it is to look through it. There's more opacity here. I don't quite know where this all ends. Do you think markets are still looking through it, or is what we're seeing today a sign of having to rethink a little bit how they process all this?
I'm going to come with you with good news, I think.
Okay.
The markets are totally looking through this, in my humble opinion. We were talking, on set before, I tend to look at the S&P 500, but if you look at the Dow, the big declines in the Dow are thanks to Boeing and Caterpillar. Caterpillar is going to be an AI story that we'll talk about later. So you could say that of the two companies that are dragging down the Dow, half of that is an AI story. So, I think that sort of tells you what you need to know. I evoke Dagan McDowell in my next comment. I don't have a beautiful chart, but I have the numbers to back it up. 2, 5, 10-year break-evens are still really low, 211 to 220-ish. We had a big come up, particularly on the 2-year, which was up at like a 3.4, and then we're down. So what does that mean? Brian, investors, the markets, people are looking through the inflationary story as well, and able to say, despite some of the skirmishes, despite the conflict, we still don't see inflation spiking. We don't see this as a big long out, drag out fight. If you did, you would see the longer end break evens really start to rise, even a 2-year break even. And frankly, we are not seeing that. So that is really good news. I think the bad news that I come with is, to me, what this is telling us is Iran somehow thinks that they can hold out longer than we can. I look at this and they think that whether it's attacking the Gulf neighbors or thinking that somehow they can survive a U.S. blockade, they're looking at this and thinking, we've got time on our side. Now, I don't know if that is true, but to me, this shows that Iran is thinking that, or else they would come to a deal, or they would say, no, we're never going to do a deal, try blowing us up. And instead, they're just kind of waiting. Is it good that Saudi Arabia is now directly involved? I don't know. That does mean that the war is getting wider and hotter, but it also means that other people now have skin in the game besides us. So I have mixed feelings on that as well. I'll finally end with my generation does not want to see boots on the ground. That is a hard no. You will not see support for that.
I can't resist this. We're going to talk about Fed today, Tom. But the idea is all of this uncertainty, okay, is going to weigh on that group of decision makers, and it's going to maybe tip enough of them to say inflation is not going anywhere and we got to do something. What do you think about that?
Yeah, I think two things. Number one, to back up Taylor's point, if you look at the S&P, defense stocks are down today. So the expectation of war, where the wreckage is, you saw SK Hynix overnight.
Yeah.
You see all the deleverage unwind. NVIDIA is weighing on the indices. The semiconductors and the memory stocks there's a lot of margin calls going on. And there's a lot out about open source, which we'll get to. As it relates to the Fed, I think in this type of scenario, they have to, I think the outcome we're going to see from the Fed today is do nothing, posture that you could be hawkish if the data necessitates it, probably on a hawkish bend in terms of forward outlook. But I think the net effect is we all know what Kevin Warsh wants to do. He wants to drain liquidity from the balance sheet, slow a little bit, which will enable him to cut at some point in the future. If that's before the end of the year, which is non-consensus, or if it's in the first half of next year. But he can get the same desired effect of bringing down and slowing a little bit from the balance sheet, and that's the goal.
Yep. Because inflation is a monetary phenomenon.
Yeah.
It is a central bank created phenomenon,
Yeah.
like during COVID. As much as this oil price spike causes pain, it is a supply disruption, but it does not cause
That's
long-term
right.
inflation.
Persistent inflation is a
Right.
monetary phenomenon for sure.
Okay,
Yeah.
we are going to follow that all day long.